Welcome to today's market report.
European stocks closed slightly higher on Thursday, buoyed by robust earnings from food and technology stocks as the European Central Bank kept its massive stimulus tabs open and maintained its view that the recent spike in inflation would be temporary. The Pan-European Stock 600 closed 0.2% higher, with food and beverage and technology sectors gaining 1.6% and 1.3% respectively. Beer brewer AB InBev surged 10.3% on a surprise rise in first quarter profit, while French IT services provider Capgemini added 6% on strong earnings and outlook. AB was the top boost to the Belgian stock benchmark, which jumped 1.7%, but broader gains were held back by weak earnings from the energy and automobile sectors. Oil major Royal Dutch Shell dropped 3% after reporting third quarter profit below expectations, hitting shares of peers BP and Total Energies. Equity markets reacted little to the ECB's decision, which was largely as expected. The bank is likely to make a decision on its pandemic-related emergency stimulus in December. If you are an equity trader, you are flying, and there's no sign that monetary policy is going to be tightened, according to Equity Capital. But investors questioned the bank's stance on transitory inflation, with preliminary data on Thursday showing consumer prices in the Eurozone's largest economy rose more than expected in October. Some of the strength in the German figure were as a result of base effects, but even taking this into account, it is hard not to conclude that inflationary pressures are increasing. German stocks fell 0.1% after the data. Volkswagen, Europe's largest car maker, dropped 4.5% after cutting its outlook for deliveries and reporting lower than expected quarterly profit due to the global chip crunch. The wider auto index fell 0.8%. Swedish online gambling firm Evolution slumped 8.2% and was among the worst performers on the Stock 600 after a disappointing quarterly report. European stocks are still set for strong gains in October on a swath of positive earnings, which pushed the Stock 600 close to record highs. Profits for Europe Inc. are expected to increase 52% in the third quarter from last year, according to Refinitiv data. Airbus rose 1.8% after the world's largest commercial plane maker raised its full-year financial targets. Lloyds Banking Group rose 1.3% as it upgraded its outlook after posting a better-than-expected quarterly profit. GBPUSD reacts to Brexit jitters with a cold heart, despite easing a bit from weekly top to 138. That being said, the cable pair seems to share the US dollar weakness amid risk-on mood. A British trawler has been seized by France and another has been fined amid an accelerating row over post-Brexit finishing rights, according to BBC. Following that, an update showed that the UK summoned the French ambassador over the issue, while Sky News reported Britain's readiness to clash with European Union over fallout from the key Northern Ireland Protocol. Other than the Brexit drama, the recent jump in the UK's coronavirus cases and the COVID-led fatalities also challenge the GBPUSD bias. Britain registered the highest COVID numbers and death toll since March, before the figures eased on Thursday to 39,842 and 165 respectively. Even so, the UK removes the last seen countries from its travel red list. UK Chancellor Sunak's multi-billion pound worth of budget 2021 and hints to taper the bond issuance, which indirectly signalled the Bank of England hawkish move, seems to play a distant role in the GBPUSD upside. More importantly, the heaviest daily fall in 12 days by the dollar index could be linked to the cable's pair's run-up. The greenback gauge dropped the most since October the 13th, the previous day, after US Q3 GDP slipped below 2.7% forecast to 2%, much lower than 6.7% prior. The softer GDP growth pushes the Fed to slow down on its monetary policy normalization rush. It should be observed that the ECB hint to start tapering the monthly bond purchases and the PEPP will end next March, propelled the euro and weighed down the US dollar. The euro has surged about 0.75% against the dollar, recovering from week close at 115.80 to consolidate a few pips shy of 117.
This is today's market news. Thanks for listening. We'll see you next time.